Hello, thanks for joining us. This is Platform. I'm Ruth Aguela. Monetary policy plays a significant role in any developing country, and the goal is to ensure economic growth and price stability, equilibrium in balance of payments, and a host of other objectives. However, monetary authorities are saddled with the responsibility of using monetary policy to grow their economies. In Nigeria, the Central Bank of Nigeria is saddled with that responsibility of formulating and implementing monetary policy by Central Bank Act of 1958. Now, this role has facilitated the emergence of active money markets where treasury bills, a financial instrument used for open market operations and reasoned debt for government, has grown in volume and value, becoming a prominent earning asset for investors and a source of balancing liquidity in the market. Over the years, the objectives of monetary policy have remained the attainment of internal and external balance of payments. However, emphases on techniques and instruments to achieve those objectives have changed over time. There has been different reforms to promote monetary stability and a sound financial system in a country, and the impact, of course, of this policy speaks volume of the economy. Well, it has been a roller coaster for the nation's economy, which has consistently witnessed times of expansion and contraction. But the bone of contention here is to assess how much impact, the monetary policy have facilitated growth, economic growth. What measures are there to be considered in order for monetary policy to be effective to bring about sustainable economic growth and development? On Platform, we'll be looking at monetary policy and financial stability, and my guest is Mr. Chris Kaka. He's a financial analyst. Thank you so much for joining us, Mr. Chris.
Thank you for having me in your studio.
All right, just a brief of his profile here we'll take before we introduce our panelists. Mr. Chris Kaka has worked in both public and private sectors, including the Nigerian Chambers of Commerce and Industry. He's a trade consultant, a lecturer with Chartered Institute, a financial economist, macroeconomic policy analyst, and currently the national coordinator of World Trade Network Initiative. Thank you once again for joining us on Platform.
Thank you for having me.
All right. Our panelist is one of our business correspondents here in NTA, Musa Abubakar. Musa, a pleasure to have you join us on Platform. And this is your first time on Platform.
Of course, and it's a pleasure to be here.
Thank you so much. Yeah. All right, Mr. Kaka, we're looking at monetary policy and financial stability. If you want to look at the journey so far for Nigeria, going back, if you want to assess the nation's monetary policy, growth in different areas in terms of ensuring price stability and all of that, what are your opening remarks?
Thank you once again. I think your prologue actually said it all. The responsibility of the central bank, which is that of ensuring the stability of the price value and the supply of actual money in the economy. So, in other words, the job they do, it's not an end in itself, but it means to a much more broader end. So it's actually like a catalyst that helps to promote, reduce adverse effect on development. There can be no words to sum it up. It's been ups and downs for the Nigerian economy, okay, which is the same across the world anyway. The Federal Reserve in the US has not found it funny. Germany, UK, all of them have also had it very difficult, particularly during and post the COVID-19 period. It's been a very, very dicey ones. That the metrics they use in actually controlling this particular indices, the supply, the price, the value of the money, had sometimes actually not been yielding the kind of result they expect. So for everybody in the industry, it's actually been a learning experience that sometimes textbooks, theories itself don't actually seems to fall out in reality. There is always a variable that turns things upside down, and that's the way I want to sum it up for now.
Okay, but if we have to strike a balance between the recovery of output growth and the stability, how would you marry both? What would be the skill for this?
Well, I think the central bank has actually not done badly. because if you recall what has been done, it also took the trend of what happened in other parts of the world. I think they took lessons from there. What really happened is that government then became an insurer and an investor at the same time to also ensure that they actually put back the economy on the path of growth, at least worst case scenario. They put it back on the path it was before the COVID-19 actually started. And so what you see is that the central bank had a lot of interventions then. I remember there was this 1 trillion naira, which was meant for the productive sector and the manufacturing sector to see how they actually can begin to produce and get things going on. There was a couple of other interventions. I remember the 50 billion naira they set for SMEs and private individuals to actually see how they can increase productions and begin to go back. There was also one about 100 million, a billion that was also given to the pharmaceutical industries to see how they can also come up with new ways of dealing with such emergency as the one we had during the COVID. So there were lots of things that were actually going on to see how they can put the economy back on the path of growth. And if you check as against that, we can say that the government has not done badly. The central bank has played its role as the regulator of the monetary policy of the country.
Musa, you want to come in here?
You talked about these programs. You didn't actually mention which part of the couple that you have actually said. 100 for 100, we have the race to 200, I mean $100 billion. Now, the new direction of the new central bank governor is, okay, let's suspend these particular programs. Let's go the other direction, which is with, we've seen the FX reform, the floating of the naira. This is the direction that this new central bank governor wants to go. So what do you make of this particular decision that we've seen recently? They've lifted the ban on 42 items.
Okay, I think what has really happened is that it's been a total departure from the path we're actually following, like you rightly observed. All that was actually being done before now was to see how you can actually put the economy back on the path of growth. I must say, at the inception of this current administration, everything just took a different turn. What we had on ground before just totally changed. Initially, like you rightly said, the 43 items which were actually banned in 2005 was also to reduce the pressure on forex, which were also causing the devaluation of our currency. And the idea was, if you check the list of the items, some were toothpicks, some were meat, some were poultry products, sheets, woods, things we have local substitutes, and we could actually produce here. Private aircraft utilizations and all the rest of them. These were items that government felt, look, let these individuals and corporate organizations begin to go to the parallel market and look for their forex to meet their own needs, rather than putting pressure and getting the exchange at the official rate. And suddenly somebody just turned it around for reasons best known to them, which I don't think is going to benefit anybody in the first place anyway. When the government then said, when they took over and then said, look, we are removing the fuel subsidy, it wasn't anything new. I mean, we all knew at the beginning of the year that the 2023 budget had a subsidy that was to lapse in June. And so we knew, irrespective of whoever took over, from after June, the subsidy was going to be removed. The implications of it is what we're seeing now, that nobody actually had envisaged. But I can tell you the truth, it became a twin problem when you then remove the subsidy which you had on fuel, and at the same time then deregulated the exchange rate, because refineries were not working, and for you to also have the energy available, you needed to import it. And every time there was a depreciation in the value of your currency, it means you had to pay more to actually have it. And so those were twin problems that were not supposed to go together. And I think the central bank has actually not done well in facing that direction.
Okay, so if the regulator, talking about the Apex Bank, want to, put into consideration as we await the next MPC decision, in terms of the pressure on the exchange rate and also the inflation we're seeing as a result of the subsidy removal and other aspects to it, what should be put into consideration, going forward? Because the whole essence is to ensure that financial stability in the markets.
Okay, thank you. I think the important thing to also note is that the decision of the Monetary Policy Committee does not dwell solely on what is actually happening in the domestic economy. Has a lot to do with what is also going on outside there, because all of them also have an impact on our trade, our balance of payments. It has an impact on the exchange rate itself. And so if you watch the current goings on before we were having Russia-Ukraine war, which had its own side of it, now the one we are now having between Israel and the Hamas group in Palestine is also putting pressure. Some will say, how does that happen? I mean, these guys
how does it affect?
Yeah, these guys are far away from us. And like somebody said, Nigeria should mind this business rather than getting involved in what is going on there. If you look at it, yes, Israel is not an oil-producing nation. The two of them are really not anywhere near it. But you understand that within that particular region, countries like Saudi Arabia, Iran, which both of them are like the third and the fourth largest producers of oil in the world, once you start that problem, that corridor of passage for them, they shut it down, and once they reduce their own export of that, the price of oil just goes up.
Yeah.
And for us that are actually importing, we have a lot of problem. Beyond that, again, is the fact that within that particular corridor, a lot of the shipping lines are there. And these are the things you need to actually move the crude down to the countries that are actually asking for it. So while there may not be a major producers of oil and impact on it, within the corridor where they are operating are big boys who are actually influencing the supply and the current market value of the international crude. And that is where it will begin to affect us if we allow it to continue. So for me, I feel the Monetary Policy Committee will take all these things into considerations and see how they can actually reduce the pressure it will have on us. The truth of the matter is, yes, while it's not their business of the Monetary Policy Committee, we must begin to find a way to provide some palliatives to pull the refineries back into action. Because what is driving our inflation today, which the government itself, as central bank, has come to realize, because they've been fighting inflations with interest rates rise, but it has not yielded any result. Essentially because what is driving inflation is not the excessive demands, but it's as a result of the fact that we have supply side constraint. That's why you see that headline inflation that has to do with energy and food has been one of the highest we've ever had in a very long time, since 2005.
Now, in a couple of days, the MBS will release latest inflation figures.
That's correct.
And most of us have this projection that is likely going to increase. So in this situation, I think we had this discussion with you. How will the central bank react to this present? I mean, how will it react to the likely increase in inflation?
Okay. The truth is, we expect inflation to also go up.
And some will scrimp again.
Yeah, I mean, Nigeria is not the only country. If you check what is really going on, you can predict that inflation is actually not anywhere going down. When you see the price of commodities in the market, some days ago I was hearing a bag of rice about 50,000 naira, and before December 24th, we might be doing 100 if you're not careful. And that thing has got a trickle-down effect on other commodities in the market and services. Inflation will obviously go up, but if you watch what the monetary policy has done in recent time, is that to say, look, let us leave things the way they are, because the instruments we have tried to use to actually check inflation is actually not producing the kind of desired result. And so if you watch them, liquidity ratio has remained the same, cash ratio has remained the same, the monetary policy rate, which is the rate that determines plus or minus what the financial institution will actually lend money out, is also there. All of them are decided to do wait and see. And that's what the global economy is also doing. Say, look, we'll perhaps leave this thing, let things play themselves out. But I think what is really driving our own, like I said earlier, is the fact that there's a disequilibrium between demands and supply, and it is skewed against supply. And so if you can tackle that particular component of the supply side, you'll find that inflation will naturally just find its way down. Having said that, it's important to say that just as peak inflations have got their challenges, very low inflations themselves have also been a challenge to the economy. So what you do is try to see, you don't fix the figure and fold your hands and go and sleep. You're beginning to watch it to make sure that it doesn't create too much problem for you, because a very high inflation is a problem, a very low inflation is also a problem itself. So I don't expect to see them again coming out and say we want to increase interest rates, Because if you watch what has happened in the last 2-3 MPC meetings, they have attempted not to do that because it's actually not producing anything.
They've already voted in the last MPC to increase 25 basis points from 18.05 to 18.75.
If you watch the last one, it was just marginal increase, not that, so it doesn't appear as if, I'm talking of major increases here. We're going to be seeing the last time it went by, I think it increased by 0.5 there about something, just a marginal one, because they know what they're actually doing. It's not going to create a change. We just needed to provide some stimulus to have the productive sector producing and then bring in a lot of forex that actually affect.
What impact will this, increase of 25 basis point have? If that is done, what impact will it have?
Okay, what will really happen is that if inflation really goes up and you do that 25 basis points, you are likely to have interest rate increase. You understand? Which is what you want to use to actually address the issue. But at the end of the day, it may become counterproductive because you also cage the capacity of the deposit money banks to lend money and the willingness of the people to also borrow, because once interest rate is high, naturally, nobody wants to go and borrow at a very high interest and they end up not being able to break even or run competitive business in the market. It doesn't really make sense in the first place.
So is the monetary policy instrument the right policy to use at this point in time, or does it need complement from the fiscal policy?
Okay, there was a time sometimes ago, I was in the studio, we were discussing, government then decided, look, perhaps we need to deal with the interest rate and decouple it. And so for the productive sector, they had a lower interest rate for them. And for the other ones, for consumptions, they had a different rate. And they actually did that because they also want to see how the productive sector are not scared away from borrowing, but how they can borrow at a competitive interest rate and still be able to produce to influence the growth in the economy. So I see them worst case scenario trying to disaggregate the interest rate and say, look, let us do the one for consumptions, let us do the one for the productive sector where the manufacturers can go and borrow at perhaps a single-digit interest rate and see how they can continue to
let me come in. At this point in time, we have high interest rate.
That's correct.
We also have high inflation.
That's correct.
Then we also have high foreign exchange.
That's true.
And these things contribute to price instability.
That's it.
What is the right mix to get this thing to address price stability?
Okay, let me start from the exchange rate point of view. A lot of people have also clamored that, oh, the exchange rate is really bad, and Naira has been devalued, seriously. That's the general mindset of everyone. Everybody wants to see their currency appreciating. But to tell you the truth, if you were working in the UN and you were paid in foreign hard currency, it wouldn't really bother you. The only thing you'd be wishing is that the exchange rate begins to go up, because once you take your paycheck, you walk to the black market. You know how much you're actually getting back. And so the point is here is that, look, while the depreciation of the Naira or the appreciation of it, they are clear indicators of the level of development and production going on in an economy. And that's why across the world, developed economies liberalize their exchange rate and leave it to float. They leave it to float because they are indicators of the level of what is going on in the economy. You'll be denying the truth when you then fix an interest rate for some people and then leave the other guys to go buy in the parallel market. But when you leave it to float, which is what we have at the moment, you are actually watching the numbers and it's giving you an idea of what next to do. But having said that, it's important to realize that the central bank doesn't liberalize the exchange rate and say, let's fold our hands and begin to look at it. So there are peak periods and there are predetermined level the exchange rate must not go beyond. There are low periods the exchange rate must not go below. But people do not realize, okay, like what is going on? People say it's about 1,000 naira thereabouts to $1. Why is the central bank just looking at it? No. Central bank can come in when you see that something is going on to come and buy forex in the market. And that will actually create some scarcity and will rejig the whole thing. Sometimes it will then sell into the market at the same time. And that will also, so it has its own way of actually handling the ups and downs. So when we say it has liberalized the foreign exchange rate, it doesn't mean that the central bank has totally removed its hand from it, but it is ensuring that at some point in time, because that would have been a slap on his part to say one of the cardinal objectives of my mandate, which is to actually ensure the stability of this, I have left it to the forces of market and demand to determine, no, that's not exactly what to do. But to marry these things together is the fact that, look, every time you have an exchange rate devaluation, it's also actually affecting inflation, because you will notice that when the exchange rates are really that bad, like we have at the moment, for investors, research will tell you that for foreign direct investment, it may not really have much of impact in the short run, but in the long run, everybody wants to take away their money from an area where your foreign denominated investments, you are really not sure what you're going to get from it. A lot of people want to pull their money out of it once the exchange rate begins to devalue for a very long time. But if it's a short one, nobody really bothers.
Yeah, because I like the fact you talked about the liberalization of the exchange rate, which still trickles down to these investments you're talking about.
Yeah.
Whether we like it or not, the MPC has to find a way to reduce the pressure. Because this is the time this administration is coming up with different reforms, and we're seeing foreign direct investments and also consumer purchasing. So if you want to create that financial stability, you still have to put a whole lot into consideration. We want our investors to stay. At the same time, we want domestic aspect of our economy to also thrive.
Okay, yeah, but you see, the one that has to do with the forex itself, sometimes a component of it is within the control of the central bank. A lot of it is also outside the control of the central bank, because particularly if you are an import-dependent country, a lot of what determines your exchange rate is actually out of your control. If you don't have, if you're not able to produce and bring in the forex, we all know that nobody produces the currency of another country. You are not allowed to do that. Yeah. And the only way to have it is that you're exporting and you're bringing in the money. And what you just said now is also put into the fact that, look, it was something counterproductive. The wisdom behind it, I still don't understand. For government to have lifted the 43 items and then say, go into the market. Perhaps some pressure group have said, can you lift this thing for us? Let us run into it. Because what you've done now is that you're putting pressure on the forex that is already depleting as itself. We have about 33.2 billion US dollar thereabout. But some international observers have said that particular figure is actually not true. You know why? You see, the forex, like stock market, is what you trade. People buy and sell thereabout. So you could use some derivatives like forward, swap, and all the rest of it. So I could buy some things for you and said, I'm going to pay so amount at so and so time, irrespective of what the reality becomes in that future. That's what I'm going to pay for it. Yeah. So you follow me? So some of what you see as our reserve are product of commitment existing somewhere. So it's like saying I have 20 billion naira in my account, but about 45% of that particular amount of money is not really mine. Waiting for maturity date for the real owners to actually take them. That's exactly what is happening with our foreign reserve. Because if you watch statistics, they're telling you what you have there is actually not totally your money. A lot of them belongs to external parties. They are subject of contract existing somewhere, but the maturity is yet to come and they will take the money away from you. And so to put in that particular figure back into it is actually a huge problem. And gone are the days when you used to say, you know, before now, central bank had a database of all bureau de change and they were supplying them forex because theirs was to provide for people who are using it for retail businesses. But now a lot of them are gone into wholesales. That's the honest truth. The bureau de change, that was why at a point in time, they sent some guys to the wholesale market to go and raid them. But it wasn't really their problem. It is just an inefficiency on the part of the federal government, the central bank, to provide the forex needed. So people have decided to go to the parallel market and see how they can actually source for their forex to deal with their challenges.
How sustainable is this decision to float the naira?
Okay. Like I said, floating the naira itself helps you to understand how your economy is actually growing. Because when you then say we had an official rate, for official businesses who can sell this to you, it's like you know you got a problem but you're just pretending about it. That's the honest truth. But when you leave it to float, it tells you what is going on. So if you need to actually put money in the productive sector, you then know what to do.
Then what happens?
In any case, while you had a dual exchange rate, there was a lot of rent seeking through round tripping.
Yes,
so people say, I want to go for a trip overseas. He go collect the exchange rate at the official market rate, which government sells to him, and he goes to the black market.
But we don't have the supply. Look at it. We don't have the supply. You float the naira. You don't have enough.
If you want to put
stabilize
it in demand, if you want to compare it to the demand,
you don't have enough forex to stabilize the naira. So how do you go about it?
Okay, that was
we
why
have suspended the RT200,
That's true.
100 for 100. These are initiative meant to like boost our forex.
I agree with you. Okay, I think the central bank itself has tried at the point in time to also address some of this issue. If you remember at the point in time, central bank said, I mean, if I went overseas now and I met an aunt of yours and she said, please deliver this particular envelope for her, it does not go through the official channels.
Yes.
But then I get it to you. You go to the black market and sell it off and trade it off. And government then pointed out, said, look, everybody who has a domiciliary account, even if he doesn't have, whatever forex is actually being sent to the person, in that same denomination, give it to the beneficiary. And the whole idea was to bring in that diaspora remittances, which is a huge amount of money. In fact, Africans are looking at it, how they can plug into that to fuel development in Africa. Diaspora remittances is a lot of money coming into this continent because a lot of our brains are overseas and they're bringing in this money into this country. And they then said, look, every penny who comes into, if it goes through the official route, so people were encouraged to use the official channel through the banks and send MoneyGrams and the rest of them, which were going to give it to you before at a rate which was less than what you get on the black market. And so you were encouraged to go to the black market if I had brought the money for you. So what people do now is they had to go to the banks because the margin, if there was any, is just going to be a marginal one. And it takes away the risk of somebody giving you a counterfeit currency and tell you, this is $20. And by the time you get to somewhere, they tell you the $20 is a fake one. And so people began to use that channel. So central banking itself understand that it cannot fully supply the forex needed. And that was part of the reason he said, let us liberalize it. And to be honest with you, the Bureau de Change, the other parallel markets are doing better than the official rates themselves are doing. The I&E window cannot supply to everybody.
Of course.
And so it was a way of shielding themselves of the blame of saying, I can't meet up with the forex of the demands. Let me then open up the market and say, let the parallel markets, let the rates between the official rate and the parallel market be a marginal one, and everybody source for your forex anywhere you can get it.
Now the Presidential Committee on Tax Reform and Fiscal Policy is now saying that, okay, let's digitalize the FX market so that to avoid issues of hoarding and speculation.
Or direct transaction, like you rightly put
so
it.
what do you make of that? So that to formalize the market, so that we will have that point of convergence between the parallel market and the official window.
I think it's a good development, but to be honest with you, the best that digitalization will do for you is helps you to trace the money who was actually taking it, where it went to, for what purpose it has.
The question is it even feasible in a country where you know what I'm talking about when it comes to the appreciation for the foreign currency to the naira?
Yeah.
Is it feasible?
The digitalization is something that is doable, and I think some countries, I can't remember their names, that have also actually plugged into that particular one. It will help to address a component of the issue, but not all in its entirety, because important things, whether you digitalize it or not, that's a transactional part of it.
Yeah.
The supply of the hard currency itself must be on ground.
Yes.
The other one is helping you to put it into a database to be able to trace it. So the core problem is providing that forex itself. And the only way is to also see how you can begin to export more. Fortunately, the crude we export now, we take it out. With the war going on across the world, it would have been a good return for all of us. But then you take out the crude, you bring out the refined crude, and we hear NNPC, Central Bank, both of them took themselves to National Assembly in point in time, say, look, NNPC has not remitted to the Central Bank accounts, which it needed to for a while, and that's where they bring in the forex in the first place. So there's a huge lot of problem about the supply of forex to the market. And until we deal with that, whatever cosmetics show you put up, it's really not going to solve the problem. It's about the supply itself.
Okay, let's take this break now. When we come back, we'll pick up with our conversation. Stay tuned.
What are we doing as a nation to first of all settle our teeming populace, especially the
NTA's political package with a third eye on the nation's political scene. I am Fisa Ogunfuyi. Welcome.
You have to be very careful giving space to people who are obviously sponsored to further the agenda of some other groups.
There's a lot of questions. A lot of questions in your closed door sessions. Some of these issues, some of the problems bedeviling the their.
In fact, between June 1st and July 17, 19-point-something billion has left the coffers of the NDDC.
I can say my constituency, they need everything because we don't have anything.
Welcome back. Thanks for staying tuned. The conversation is still on monetary policy and financial stability. Mr. Kaka, you were just sharing with us the feasibility of the push, or rather the next move for the digitalization of the exchange rate. So, if you've talked about it being possible, but let's tilt the conversation. If you want to, do a comparison with the outlook of major financial markets for the country, are they a par?
Let me link it up to. Obviously, we know that the debt burden, I don't have the statistics down, but I know it has risen since the beginning of this year to a very alarming rate. The excuses managers of our economists will tell you that your debt to GDP ratio is within the manageable level, so we can still continue to borrow. And I think the ratio of domestic debt to foreign one should be about 60 to 40 thereabout. I'm not sure the figure right now. And so they feel if your debt to GDP ratio is still within the manageable level, then you can still continue to borrow. But then the servicing of this debt has become a huge burden on us, essentially because of the devaluation of the currency. So I'll give you an illustration. If I have a 50,000 naira debt when an exchange rate was $1 to perhaps 500 naira, the naira I need to actually repay that particular debt, even if I convert it to foreign currency, is going to be more when that particular currency has gone from $1 to 500 naira, from $1 to 1,000 naira. I'll perhaps need more to pay it. So the debt burden, servicing our debt, becomes a bigger problem for us, particularly when your exchange rate begins to devalue. And that's one of the disadvantages of the devaluation of a currency, which is the problem we have at the moment now. So what we have as our statistics of debt, when you translate it into foreign currency, might just be looking at the same. But then what you need in the naira to buy the forex to pay back that debt, it's a very huge one, and it's not going to help Nigeria as it is at the moment. I don't know if I've been able to put that in answering the question you've actually raised.
So, but are you saying that as it stands now, it should be like this so we can be able as a nation to service our debts? No,
don't get it wrong. I'm not saying you should continue to depreciate your naira. Look, the appreciation of naira has got its advantage. It's got a flip side as well. The depreciation of the naira against other currency has got its flip side as well. I'll give you an example. If your naira appreciates, I mean, if I were buying an X item for $100 when the exchange was like 500 or thereabout, if you multiply it, I will need more naira to be able to acquire that particular item if my currency appreciates. And so what currency appreciation does is that it makes you begin to want to consume foreign goods, because here you now need less naira to be able to buy the same amount of dollar. But when you then depreciate, when there is a depreciation of your currency, you find that import itself become more expensive. However, export become competitive because you're able to export more. I don't know if you follow me. So both of them has got their positive and their other sides to it. Either one you choose. In fact, there are countries that deliberately choose to want to say, let us just initiate a process to devalue our currency. So that we're able to actually be able to become competitive in the international market and export more. Because import becomes expensive, people are beginning to look for substitute to the import, and they want to consume because it's not difficult for them to pay more in terms of trying to get what is foreign.
Now, I would like to pick your thoughts on this. There's a school of thought that is actually promoting this idea of commodification of naira by cassava. I don't know what you make of that, because there has been serious conversation on how to actually stabilize the naira, and part of which this came up. I think it was a journalist that our president visited one of the countries, and he came up with, shouting commodification of the naira by cassava. What do you
Okay, I wouldn't really understand what you mean by commodification. Perhaps if you explain that, I'll be able to understand.
Okay.
I'm hearing that phrase. I'm hearing the phrase for the first time now.
Actually, it's like backing the naira with a particular commodity.
Okay.
So that to maintain that value keeps, at a particular point whereby it won't be affected by other things, like we've seen in the naira, where we have more demand for the dollar when we go to import certain items from other countries. So basically, that's what's backing the naira with a particular commodity.
Okay, I know you back your currencies with the gold, and as it appreciates, also
so instead of gold now, cassava now comes to play because we have it in abundance and things like that.
I think we're one of the largest producers of cassava in the world. That's why it's on the prohibition list. You are not allowed to import cassava into this country because at a point in time we begin to have cassava glut. I know China was trying to do a deal with us. I don't know how successful that was in trying to buy cassava for Nigeria, because not only are we the largest producer of cassava in the world, but the variety we have is also a very good one, that a lot of them want to use it in making some pharmaceutical items. But the codification of it, I don't know how that will really work out, using cassava as a commodity to tie the value of your local currency to it, because I don't know, I don't see that selling so much in the international market. So I may not be able to give an adequate response to that particular question.
Recently, the central bank had said both that old and the new naira notes should continue to be legal tender. Where does this direction put our earlier cashless policy?
I think let me put it this way. Sometimes when I get to make the mistake, sometimes when I'm holding the 200 naira, the new note, I'm assuming it's 100 naira. And when I had given it at someone, they say, wait for your change. And I'm like, I'm really sorry. I don't know the wisdom behind it, but I hate to say this on air. It was a way of settling some croonings of the government in power at a point in time.
And that's your perception.
That's my own perception. That's why I said, yes.
Because there are other narratives.
They felt it was necessary for you to actually change the value. Now, you change so some say it wasn't really a naira you designed, it was a recoloring of our currency. And from what people have said, the old currency is even more durable than the one we have at the moment now. But then, to have a look at it, you said you were driving towards a cashless economy, and like I said when I had you once, the whole idea of a cashless policy is moving towards an economy where currency does not exist anymore. That's the concept of cashless policy. Even if it ever exists, it's going to be the very low denominations that will be in existence, maybe the 100 naira, the coins, and the rest of them. Go across the world. That's what's going on. Now, the idea of going cashless is also a global phenomenon. You just find yourself easing into it. The way typewriters came in and they eased out with the inventions of computers, you notice that you just find yourself, you want to become relevant in the financial service sector. People now walk into a shop and just take their phones and just scan a QR code. Bam, I've done my payments, because you have an e-wallet. Rather than carrying huge amounts of money in your pocket, or when you don't have it, you get to the counter there, you give your card. I give you an instance once. I was at a ShopRite and I was standing in a queue that lasted for more than 30 minutes, and when we got there was no network, everybody. But those who could use the QR code went away with it. So the point of the matter is, there was no point with designing your currency when you said you wanted to go cashless. Yes, you made several attempts at it, but then that didn't stop you. To redesign the currency then meant you've actually backed out on the decision to actually go cashless. What we saw in Nigeria, even when we said we want to go cashless, though what we had then was a cash-light economy, we were not cashless because currency was still in circulation. Yes, we said you couldn't do, for corporate organization, you couldn't do beyond a certain amount in the bank. For individual, you couldn't do beyond 3 million. For corporate organization, you couldn't do beyond 5 million. But then there was a caveat to it. So if I wanted to do beyond the ceiling I've been told not to, all I needed to do on every 1,000 naira, I needed to pay a percentage of it. For a person who has got an ulterior motive, I mean, if what he wants to use the money to do is weightier than the cost he has to pay, he pays it. So you were faulting your policy in the first place. When you say you were going cashless, you had a ceiling on the amount of money I could withdraw at the bank, but you said I could withdraw beyond it, I needed to pay an extra charge on it. You defeated that particular purpose. And that was an attempt to actually, you were not supporting the agenda, the global agenda of fighting terrorism and all the rest of it, because that was a way to deal with it. But to answer the question, when we changed our currency, if you were going cashless, you would have done that with a smaller denomination. Rather, what the government did was they began to change the big denominations, the 1,000 naira, the 500 naira, and that was telling you, I think now I have backed out from the decision to go cashless. Compared to what has happened that period, to now think that the two currencies can run side by side, what was the point of the deadline you gave us in the first place?
I think part of the intricacies around that was that it was time to redesign the naira. Okay. That's one. And then I think the way, based on what financial experts have come out to say, the way it was being implemented, the time frame, it was too stringent.
Yeah.
Now, you want to have a cashless system in a country like Nigeria that has a population of more than 200 million. And we know that transactions in rural communities will continue to thrive in exchange of currency.
That's correct.
There's no digital literacy yet at par with the measure you're bringing in place. Even if it's something we want to look at, in tandem with global practices, there must be certain areas that must be aligned before everybody can be carried along. Talking about financial inclusion, I think that's where the lapses are. So what are your recommendations if we have to go that direction, even if we're looking at the legal tender, everything is going, the old and the new are all legal tenders according to what they've said.
Okay, yeah, I know initially they said them. Your observation is very correct, I must tell you. Yes, in rural communities, there are no banking services. But these days now, people will hardly walk into banks. Except you have something very serious to want to go and do in the bank. People hardly walk into banks.
People still trade in bags of money in markets.
And that's what we're trying to reduce. The cost of management of, the cost of managing cash for the central bank, it runs into billions of naira. For the deposit money bank, the cost of sending to the central bank, use a bullion van, hire policemen to escort the money, and the risk involved in it is just too much. So when you said you wanted to go cashless, it was a good idea to go cashless, but you were not supposed to force it on people. So the forcing of it was to you to have a deadline. Fine, you want to justify the fact, whatever excuse you give, it was imperative for us to redesign our currency. Like you said, the timing was wrong. If the timing is right, why did you give so much a deadline? I mean, such a short period of time for people to change them. It wasn't as if anything was wrong with our money in the first place. In any case, redesigning and changing it wasn't going to do anything to the value of the naira in the first place. It wasn't going to make the naira appreciated.
So going
but then
forward,
one thing was going to be certainly done. Okay. For the central bank, it felt that, look, a huge amount, about 85% of the money that it was supposed to be regulating was not within the financial system. And so anytime he said, I want to increase this, I want to increase some rates, cash reserve ratio, it was not having an impact because the money were in private pockets. People were building parallel banks in their home. And you know that was true because when they then said everybody go cashless, people brought out currencies that were in the wraps of banks that have died more than 20 years ago. You see, some intercontinental banks, some names of banks kids of this generation have never heard of. And that was to tell you, these were part of the challenge the central bank was having in regulating the supply of money in the market because most of the resources were in private hands. And so when you then use that as a justification and say, I want to redesign my currency, it means you that have hiding your money somewhere, you've got to bring it out because that's the only way you can change it.
Now we're talking about some of the benefits of
Of course, I'm trying to say there are benefits to it.
So, but do you see the possibility of going cashless for a country like Nigeria if certain areas are not put into consideration?
The connectivity among banks have got to, I mean, we know we are not there yet, but I can tell you that going cashless is something we can do. I said on one of the programs here that, look, if you leave Nigerians, we are going to go cashless. We're easing ourselves into a cashless economy. You know why I said so? If you go to Lagos, which is a metro city today, people take these BRT buses, like I said. People now have to carry cards, preload it and walk into a BRT bus, and then swipe it through a device. And then you paid your money, you put your card back. When people begin to see the benefits of those who are utilizing some of these new methods of payments and doing buying and selling, you just find yourself logging yourself into it. So going cashless was not something to be forced on us. As a matter of fact, some countries have really gone far. People now have an implant on their skin here that once they walk into a place, type their phone. They swipe it across the device. It's debited them. They're gone.
I don't think I want to see an implant in my body.
But really, going cashless is a must. It's something that must be done.
You can
because when you consider the cost of printing this cash.
That's correct.
And it gets to a point whereby the cost of printing cash will be more than the value of the cash itself.
That's true. That's true.
That's just it.
That's true.
The federal government plan to reduce cost of borrowing. Now, with what is happening globally, we have central banks tightening. They keep on tightening monetary policy. We keep seeing interest rates going higher. So how do we then address the issue of poverty? Then the issue of small and medium-scale enterprises. How do they get this fund? considering the high cost of borrowing?
Okay, I think you asked an excellent question. The truth of the matter is, if you go check our tax records, there are big companies in Nigeria that don't pay tax. The small companies, the small ones, that small woman somewhere pays more tax. If you check the ratio of her tax to the income she's making, it is far higher than that one who has got the big multinational companies. Whether you, some will say they don't pay, because most often than not, it doesn't go into the government coffers. The non-state actors, local government touts and the rest of them, some cronies or politicians touts are the ones collecting it. But these people who run small businesses, I tell you the truth, check the ratio of the revenue they make as against their tax. They pay more than the big boys who run big companies. And so that in itself is actually a problem government needed to deal with. But to come to your question, which you asked about, what exactly now?
The cost of borrowing.
The cost of borrowing. If you say you want to reduce the cost of borrowing, which is a good idea, excellent one, but then with rising inflation, how would you want to deal with that? Nobody wants to go borrow money and at the end of the day, I'm not able to pay back.
Yeah.
I don't know if you follow me. Nobody wants to borrow money and at the end of the day, I'm not able to pay back. So what you actually need in the first place, yes, it's good to encourage people to borrow. Perhaps if you say for consumptions, which is okay, but then it will also drive inflation. But the way around it, as you've increased the pump price of fuel, energy has increased, every other person's rent has increased, every other services has found a way to increase. And so the idea of saying, some say public servants were agitating, pay us more salaries. It's not going to fly. You know why? Every increase in wage without an incommensurate increase in productivity will also drive inflation. That wasn't going to work. Fix our refineries. You find that the cost of things will come down. Get the commodity board back into existence. They were the last to start buying commodities from people, such that you are able to regulate the price of commodity in the market. So if a bag of rice, government says 45,000 naira. If it is higher than that, government pays the subsidy to the producers and ensure that the price remains stable in the market. If you have a business, please come to a particular, provide an evidence of the business you have, and let's see how government can support you with a grant to run that business. But to then say the Ministry of Humanitarian Affairs is distributing money, what is your basis of defining who is a poor person in a community in Nigeria today?
There's a social register that it's been speculated to be used to identify those households that are really poor and vulnerable. There's a capturing that goes on with the National Social Register. That's where they identify these households and the number of persons there. So that's the data being used for the distribution. But
and for how long will you do that?
I'm not the.
No, I'm asking.
I'm just telling you.
How sustainable?
Mr. Kaka, the main thrust here is to look at ways that we can help our economy have value going forward, because of the whole narrative we're seeing play out, the current realities. But if you want to look at the impact of macroeconomic, outcomes from the monetary policy, has there been any impact to it?
Addressing price stability.
Yeah.
Okay, yes. Like I said, the issue about it is the central bank, has been trying as much as it can to also see how it can actually juggle the interest rate. Like I said, it's not figures you fix there and you're going to sit down. You've got to be monitoring it, because the height of it is also a problem, the very low of it is a problem, and you want to see how it remains in the middle. The central bank alone can't do it. You needed some fiscal policy measure to also complement what the central bank is doing.
Okay.
The best the central bank can do is perhaps provide credit for producers and people in the agricultural sector to produce more food. But then people also need to have the money in their pocket to be able to buy it.
All right. In just a few words, what is your projections? What do you want to see, in terms of that financial stability for the nation?
Well, I'm expecting to see a system at the moment, the outcome of that meeting. I do expect them to actually tamper with liquidity ratio, because there is no excess liquidity in the system anyway. They themselves know. I do expect them to tamper with the cash reserve ratios. If you do that, you might be caging the capacity of deposit money banks to give out resources. I also do not expect them to begin to find the need to want to increase the monetary policy rate, which influences the interest rate in the market, because it's not going to help us. It has never helped us. You make it possible, people are not able to borrow for consumption, which is what they are doing now.
Yeah.
So I expect them to actually have things stay the way they are and let us watch things play out, but then do something about the capacity of the productive sector, the real sector, to be able to produce and bring in the forests required.
We want to thank you very much, Mr. Chris Kaka, for your time on platform. It's been a pleasure. Thank you for your time.
Thank you.
Musa Abubakar, thank you so much for your input on platform. We do appreciate it.
You're welcome.
All right, we've been having a conversation on monetary policy and financial stability. Now, the overall goal is to see jobs are being created. We have non-oil export, and we have our industries being revived because we want a thriving economy. That's Platform. I'm Ruth Aguilera. Bye.